Welcome back, everybody, for another deep dive. This time we are taking a look at how generative AI is impacting capital markets, specifically the future of trading. Kind of a fascinating topic, I think. Imagine having a system that can predict market trends, help make smarter investment decisions. That's what we're going to be looking at today. The source material for this deep dive is an article called The Future of Trading, exploring the impact of generative AI in capital markets. It was published on the DX Today blog just a few days ago by Rick Spare.
Yeah, great article. Really dives into why this technology is causing such a buzz in finance.
Yeah, for sure. And it's not just hype. This is really happening. But before we get too deep into all that, maybe we should start by explaining what generative AI or GANs actually are. We hear those terms all the time, but I think it's important to understand how it works, the nuts and bolts.
Absolutely. It can seem complicated, but at a basic level, imagine you have two neural networks. They're basically computer programs that can learn. And they're always going back and forth. One network, we'll call it the generator. It's like an artist. It tries to create data that looks as real as possible. The other network is the discriminator. It's the critic. It judges the data and compares it to the real thing.
So it's like a competition. One side is trying to trick the other.
Yeah, exactly. And this constant challenge makes both networks better. The generator gets better at creating realistic data, and the discriminator gets better at spotting the fakes. This keeps going until the generator is making data that's almost impossible to tell from real market data.
Okay, so now I'm starting to see how this could be used for trading. But why is this so important? Why do we need to create data when we already have tons of historical data about the market?
That's the really cool thing about generative AI. It's not limited to just recreating what's already happened. So instead of just looking at the past, you can use these GANs to create all kinds of scenarios, including things that don't show up in the historical data, like black swan events, things that could have a huge impact on markets. It's like having a simulator where you can test your trading strategies under extreme conditions without any real risk.
So like a financial crash test dummy.
Exactly. Let's say you're worried about how rising interest rates could affect your investments. You could use generative AI to create data that shows exactly what might happen in that situation. That way you could see how your portfolio would perform and make adjustments.
So you're not just reacting to what's already happened. You're actually preparing for what might happen in the future.
Yeah, and that's something you just can't do with traditional methods that only rely on historical data.
Yeah, it's super relevant today because the markets are changing so fast, always being hit by these unpredictable events.
Exactly. And that's just one example. Generative AI can also be used to develop entirely new trading strategies.
Oh, wow. We'll definitely have to get into that. But I'm also wondering, how did these algorithms learn and adapt? Do they need a person to constantly manage them, or can they do it on their own?
That's a great question. What's really neat about these GANs is they can learn and adapt on their own. With very little human intervention, they're designed to analyze data and adjust their outputs based on this feedback loop between the generator and discriminator. Basically, they're constantly teaching themselves and getting better over time.
So we're talking about a system that can analyze data and also learn from its mistakes and improve its predictions.
Yes, precisely. And this is what makes generative AI different from traditional algorithms, which often needs someone to make manual adjustments and updates to keep up with the market.
So it's like having a trading assistant who's always learning and getting better. It makes you wonder what the role of human traders will be in the future.
For sure. That's something we're going to have to discuss more. But first, I think we should look at how this ability to create synthetic data is impacting things like algorithmic trading and risk management.
Yeah, definitely. Let's get into that. I want to see how this is all playing out in the real world.
Let's do it.
Okay, so we've been talking about how powerful generative AI is and how it can create synthetic data. Now I want to know more about how that impacts something like algorithmic trading. That whole world just seems so mysterious,
I get it. Algorithmic trading can be a bit of a black box, for sure. But really, it's just about using computer programs to make trades based on rules and strategies that have been set beforehand.
Oh, so instead of a person sitting there watching the market and making those quick decisions, it's the algorithms doing all the work.
Yeah, that's the basic idea. The algorithms can process tons of data, way faster than a human. They see patterns and make trades in milliseconds. And what's really cool is that now generative AI is being used to make those algorithms even better.
I see where you're going with this. We talked about how AI can create those, like, virtual markets with synthetic data. Are they using that to train the trading algorithms?
Exactly. By training the algorithms with synthetic data, they can see way more situations than just using historical data.
Okay, that makes sense. If
Market.
you only show an algorithm normal market stuff, it's going to freak out when things get weird. But if it's already seen all kinds of crazy scenarios, it can handle anything, right?
Yeah, like it's gone through boot camp for market chaos. And that's not even the craziest part. The article mentions that generative AI isn't just being used to make old algorithms better, it's being used to create totally new trading strategies.
Wow, so AI is actually coming up with strategies that people haven't even thought of.
Yeah, think about it. You give the AI all this market data, and you tell it what you want to achieve, like, making the most money or minimizing risk. The AI then goes and explores all these potential strategies, and it can see patterns and connections that we would probably never even notice.
That's pretty mind-blowing. So it's not just about doing what we already do, but faster. It's about coming up with totally new ways to approach trading.
Right, and because it can analyze so much data, AI can potentially see opportunities that we completely miss.
This all sounds amazing, but what about the traders, the humans? Are we going to have robots running Wall Street?
It's a big question. I mean, it's obvious that trading is changing because of automation, but I don't think humans will disappear completely. In fact, I think the future of trading is all about AI and human expertise working together.
Like a team, not a competition.
Yeah, exactly. The way I see it, AI can handle the number crunching, the really fast trading, and the complicated strategies. But humans are still much better at things like understanding how the market is feeling, interpreting things that happen in the world, and making those strategic decisions that require intuition.
So we're not just letting the robots take over and hoping for the best.
No way.
It's all about figuring out how to use the best of both worlds.
Humans and AI. Imagine traders using AI tools to analyze trends, find opportunities, and manage risk. Then they use their own judgment and experience to make the best decisions.
I like that, a mix of the best of both.
And I think that kind of collaboration could lead to smarter investing, better risk management, and just better outcomes for everyone.
Okay, I'm convinced that AI and humans can be a good team. Now, getting back to the article, it also talked about generative AI being used for risk management. And with all the uncertainty in the markets these days, that seems really important.
Absolutely. Risk management is another area where AI is going to make a big difference. Remember how we talked about creating that synthetic data to simulate extreme market events?
Yeah, those what-if situations, like what if the market crashes? How would my portfolio do?
Exactly. But using AI to simulate all sorts of crazy scenarios, financial institutions can really understand their risk.
So instead of waiting for a crisis to happen, they can use AI to figure out what might go wrong and be prepared for it.
Exactly. It's like having a custom-built risk management system, one that's always learning and changing as the markets change.
That sounds incredibly valuable, especially now. But how is this different from how risk management was done before? Haven't they always been trying to assess and avoid risks?
Of course, risk management is not new, but the old ways mostly relied on historical data and statistics, which can't always capture the craziness of modern markets. AI lets us look beyond the past and imagine all sorts of things that could happen, things that are hard to predict with the old methods.
So AI can see things that even the experts with all their experience might miss.
That's the cool part about AI. It can go through massive amounts of data and find those hidden patterns, things that we might not even notice. This gives us a much deeper understanding of risk.
Like having a superpower that lets you see hidden dangers. I bet this is really useful for things like cybersecurity, right? Those threats are always changing.
Yeah, absolutely. Cybersecurity is a perfect example. AI can simulate all sorts of cyber attacks, so companies can prepare their defenses and be ready for anything.
It's like giving your cybersecurity team a training simulation against every possible attack.
Exactly. This kind of thinking can save companies a ton of money and protect them from cybercrime.
That's awesome. We've talked about risk, but what about compliance? All the rules and regulations in finance. It seems like a nightmare to keep up with all that.
Yeah, you're not wrong. Compliance usually involves a lot of people analyzing data, looking for anything that seems fishy or breaks the rules. It takes a lot of time, and it's easy to make mistakes.
So are you saying we should replace all the compliance officers with robots?
Not exactly. AI can definitely automate a lot of the compliance work, but I think it's more about making the human teams better. AI can analyze all that data and spot anything that looks suspicious.
Like an AI detective working behind the scenes.
Yeah, that's a good way to put it. Then the human compliance team can focus on investigating those potential problems, instead of just spending all their time looking through data.
So it's about making things more efficient and making sure nothing gets missed.
That's a big part of it, yeah. But it's also about staying ahead of the game. Rules are always changing, and it's hard for companies to keep up. With AI, they can simulate different scenarios and be ready for anything.
Like having a crystal ball that shows you the future of
It's
regulations.
something like that. It lets companies be more prepared and flexible, which is good for everyone.
This is all super interesting. AI seems to be touching every part of finance. But stepping back a bit, what are the big picture implications here? How is this all going to change the future of finance?
It's a great question, and it's one we need to think about carefully. I truly believe that AI has the power to completely transform how finance works, from how we invest to how the markets themselves operate.
Okay, so what are your predictions? How is AI going to change everything?
Well, for one, I think we're going to see more and more automation in all kinds of financial processes, AI systems taking over tasks, which frees up people to focus on the bigger picture.
So less time on number crunching and more time on strategy and creativity.
Exactly. I think this could lead to a more efficient and innovative financial industry.
That sounds great, but what about all the jobs that will be lost to automation? It's a bit worrying, isn't it?
Yeah, it's a valid concern, and it's one we need to address. As we move towards an AI-powered workforce, we need to focus on retraining people, giving them the skills they need to thrive in this new world.
So it's not just about adopting the technology, it's about making sure everyone benefits from it.
Exactly. The goal should be to create a future where AI and human skills work together, to create a financial system that's better for everyone.
Now that's a future I can get behind. But getting back to generative AI specifically, what are some other potential impacts we should be thinking about?
Well, one really interesting thing is that AI has the potential to make sophisticated financial tools available to everyone.
What do you mean by that? I thought people already had access to those tools.
Not really. Usually things like advanced trading algorithms and risk models, they're only available to big institutions with a lot of money. They're expensive and complicated to build, so smaller companies and individual investors can't really use them.
So AI could make things more fair, give everyone access to the same tools.
That's the idea. Imagine individual investors using the same AI-powered tools that hedge funds use.
That would be a huge change. But wouldn't it also be risky? What if people use these powerful tools without understanding the risks?
Yeah, that's a good point. We need to make sure people use these tools responsibly. We need education and resources to help people understand AI and how to use it safely.
So it's not just about giving people the tools, it's about teaching them how to use them the right way.
Exactly. This will require everyone to work together, educators, regulators, and the financial industry. We need to create a culture of responsible AI adoption where everyone benefits.
This is all really fascinating. We have this amazing technology that can change everything about finance, but we also need to think about the risks and make sure we're using it ethically.
That's exactly right. It's all about finding that balance between innovation and responsibility, using AI to create a financial system that works for everyone.
I agree. This has been an incredible conversation so far. We've covered so much ground, from the basics of generative AI to its potential impact on trading, risk management, and even the future of finance.
And we're not done yet. In the last part of our deep dive, we'll look at some real-world examples of how generative AI is being used in finance. And we'll talk about the ethical considerations we need to keep in mind as this technology keeps evolving.
I can't wait to get into those real-world examples and see how this technology is already making a difference.
Stay tuned, folks. The future of finance is unfolding right now.
All right, so we're back for the final part of our deep dive into generative AI in capital markets. It's been a wild ride so far.
It has, from the nuts and bolts of how it works to reshaping the entire financial system,
Totally. But I think it's time to get down to brass tacks. See how this is all playing out in the real world?
Yeah, let's see some action. Theory is fun, but seeing is believing, right?
Exactly. The article mentioned an example of a big investment bank using generative AI to build pricing models for those really complicated financial products.
Oh, yeah, that's a great one. Pricing those things is a nightmare, even for the experts. So many variables, so many possibilities.
Yeah, it's not like you can just punch some numbers into a spreadsheet and get a good answer.
Not even close. The old models, they rely on all these assumptions, and they can be way off, especially when things get volatile.
So how did AI help them solve this?
They used AI to create synthetic data, like we talk about. But this time, it was all about simulating those market conditions that are really hard to predict. They built this virtual testing ground For these complex products, they could simulate anything, even those crazy events that would break a normal model.
So they were prepared for anything.
Exactly.
Mhm.
And because they had this rich synthetic data, they could build much better pricing models. They could be confident in their pricing.
And probably make a lot more money, right?
Most likely, yeah.
It seems like they were really good at managing risk, too, by testing those models against all those crazy scenarios.
Absolutely.
Yeah.
That's a key takeaway here. Generative AI isn't just about speed or efficiency. It's about changing how we think about problems and making better decisions.
Okay, that's one example. Do you have any others, like from the trading floor?
Oh, yeah, there's a good one about a hedge fund using AI to find those little market inefficiencies, those hidden opportunities.
Hedge funds, they love finding an edge, right?
That's their whole game. So this hedge fund, they used AI to analyze tons of data, looking for patterns that humans would probably miss.
Like finding a needle in a haystack.
Exactly. And the AI delivered. It found these inefficiencies that the hedge fund could exploit. Turned out to be very profitable.
Wow, so AI can not only make things fair, but it can also give you an edge. But isn't that a bit unfair to those who don't have access to AI?
That's a really good point. It's something the industry needs to figure out as more people start using AI. Transparency and fair access are crucial for healthy markets.
I agree. It's definitely something to think about. Now, moving away from trading for a second, what about risk management and compliance? We talked about those before, but do you have any real-world examples?
For sure. Some companies are using AI to simulate all kinds of cyber attacks, which is super important these days.
Cybersecurity is a huge deal for financial institutions. They're prime targets for hackers.
Absolutely. The old security systems, they're good at catching known attacks, but they're vulnerable to new threats, the things they've never seen before.
So how does AI help with that?
By creating synthetic data that looks like all sorts of cyber attacks. Companies can test their systems against a much wider range of threats, even attacks that haven't happened yet.
So it's like a cybersecurity boot camp for their systems.
Exactly. This way, they're always prepared.
Makes sense. It's not just about making money, it's about protecting everyone.
That's right.
And it's not just cybersecurity, right? Some companies are using AI to simulate different regulatory scenarios to make sure they stay compliant.
Yep. Keeping up with regulations is a huge headache in finance. But AI can be like a virtual compliance officer, always monitoring the rules and alerting companies to any changes.
Wow, so they can stay ahead of the game.
Exactly.
Another example of AI helping companies make better decisions. This has been amazing. We've seen how AI is changing trading, risk management, compliance, even the future of finance itself.
It's a truly transformative technology.
It is, and it's going to be really interesting to see where it goes from here.
I think so too. We're just at the beginning of this AI revolution in finance.
Well, thank you so much for joining us on this deep dive, everyone. I hope you've learned something new about generative AI and its potential. As always, stay curious, stay informed, and stay ahead of the curve.
The future is being written right now, folks.
Yeah.
And it's up to all of us to shape it for the better.